Thursday, 23rd of February. Let's get the regular briefing underway. And a couple of things to talk about. Obviously, you had the FOMC minutes last night, and you had obviously some breaking news. You were around yesterday afternoon when we had some updates around the French election. So looking at the charts this morning, you can probably tell then there's not much in the way of a real sustained reaction on the minutes. That was largely probably as expected. They are dated in nature, and since that point we've already had a couple of events that have come from Fed communication, the payrolls report and so on since that point. But before we get into the minutes, let's have a broader look across the board at the moment, and the regular kind of divergence that we've been seeing in the major currencies pairs that has been pretty much evident throughout this week, that being some underperformance in the euro-dollar pair comparative to cable. Obviously the dollar's a little bit weaker post the minutes, which overall interpreted as not as hawkish as possibly could have been, and so the dollar a little bit softer, so euro-dollar not down a considerable amount, down about 10 pips, but this is a comparative to cable, which is taking a bit of an extension this morning above that pivot level. Same kind of rules apply, I guess, in regards to the reasoning from a fundamental point of view, given the some degree of clarity, at least until the point of triggering of Article 50, in comparison to the increasing nervousness over France. We'll have a look shortly, but latest polls kind of overnight suggesting that Le Pen is increasing further the first round lead in the French elections, in those polls coming up to that first round end of April. Elsewhere, equities, you can see here the DAX, Euro Stoxx fairly flat, minor positive. The S&P sitting around pivot. A couple of individual corporate earnings coming out. We'll have a look at those as well also shortly. Oil elevated. We had the delayed API crude oil inventories a day later than normal due to the President's Day holiday. They were bullish overall. We'll dissect those shortly. And in the Treasury market, you can see here pretty flat, finding a bit of initial support here around pivot at 124.23.5. So overall, fairly tame open. Nothing from a broader macro perspective, i.e. the FOMC minutes, really enough to throw it too far off kilter. So sentiment-wise, pretty much just picking up the baton really from yesterday. As I said, the euro has found a bit of a floor for the time being, more to do with really it's a bit of dollar weakness post the Fed. But overall, still some elevated concerns, I'd say, still apparent in the French election situation. Talking of that, let's start with a quick look at the euro-dollar pair yesterday. Two real distinct opportunities, I guess, from a news point of view. Let me just highlight them here. You can see two really equally sized candlesticks over the initial reaction, and the first one was very interesting from a trade execution point of view, and I think there's a lot to be learned from how this came out. And that was because if you're looking at the euro-dollar pair yesterday, apart from the late Asia and European Open, where we obviously dipped lower, at that point it was fairly confined in terms of price movement. You're talking about a 20 pip range, really, 105 up to around 105.20. Markets were pretty quiet all through the afternoon. The open on Wall Street was nothing particularly inspiring, and then we were awaiting a press conference from Francois Bayrou, who was a centrist, or who is a centrist politician, and it was about the understanding then of what that would mean for the race going forward and people's expectations about the probability of Le Pen winning. The point being that this new chap, or not so new, I'm sure if you are French, you'll recognise Francois Bayrou very well. He has ran for the presidential or the presidency in 2002, 2007, 2012. Hence the reason why the market was very pretty sure that he could potentially run for this again this time round. It's the normal occurrence that has happened. He's kind of known in France as the third man, if you like. Always runs, but never really gets anywhere because he hasn't got enough following. So the question mark here was in regards to if he was to run, that would be, by default of his political leaning, a net negative for Emmanuel Macron. Given the fact that he is centre-left, what it meant is it would have taken away some of the voting power away from Macron, would have split then a certain percentage points over, and Macron then, who at the moment, according to the pollings, if it was to go to a second round runoff against Le Pen, Macron's lead over Le Pen is greater than that of Francois Fillon. But if Bayrou was going to run for president, then what that essentially would mean is that Macron's possibility of getting through to the second round may have lessened. That means that Fillon's ability to beat Le Pen is less, and so Le Pen's chances go up, i.e. that would have been met negatively by the euro and also the appetite, you'd guess, for French bonds or OATs. And so going into this event, the market, it felt like, because there wasn't a great deal going on, that the market was waiting for that event to act as a bit of a catalyst. We were monitoring it here live. We had a tweet deck up on the shared screen so some of our French traders could read it. I think they need to do a little bit of work on their speed reading. But we managed to catch that pretty quick. But from an execution point of view, it was interesting, and I think it was a good lesson for some of the guys here, for sure. It was an event that I know someone like Will would have been his absolute bread and butter type of trade. You know, it was all about speed of execution and being very aggressive in nature to take that trade on, because ultimately you only really had a matter of seconds to execute it if you were going to get it on the first move. That's because the way it was coming out, there was with events like that, they tend not to come through the traditional kind of news outlets like Bloomberg or Reuters headline. Quite often Twitter is actually the fastest because you're following it in the local language, people there at the event while he's speaking, and they immediately tweet it. And so if you can get hold of that, even with a couple of seconds advantage, that's all that you need. Now, what happened was we were monitoring it, we caught the tweet, the squawk was talking, I was shouting it, and then it was almost as if the inexperience, you see the validation of the price spiking higher in the euro, which happened. If I put this euro chart on a minute, you can see here, these are minute candlesticks now you're looking at in the euro dollar pair. It shot higher by about 50 pips in about 3 seconds. Now at that point, I've been already shouting it for a couple of seconds, but if you hadn't already got into the position, it's very dangerous then that you've kind of missed it, and then you're trying to chase a move where proportionately, I would say 75-80% of the move is already done, and then you're getting in on a bad entry. And so again, this type of trading the news doesn't suit all styles, because ultimately the reason why someone like Will would be very good at it is because he's very his appetite for taking on risk is quite high. He's an aggressive in style type trader, and so he feels comfortable in taking that type of risk and making that decisive decision very quickly. Now that's not to say that that will suit everyone, but the lesson learned here is then don't get caught up trying to get long when inherently what tends to happen with these what's called a fast money move, it explodes higher and then snaps back pretty quickly. Now that can either fully reverse or comes back and then starts to move higher, and potentially it could be that second move then becomes your entry. But in this point, obviously what happened is about over 50% of the move was retraced within the next 2-3 minutes. And that's where a lot of people can get caught out. So a couple things to learn there on the execution side, and certainly definitely something to learn from a scenario strategy building side of knowing who these people are in order that, and how the market might move, so you can interpret that information quicker, essentially. One of the things here was that Bayrou may be running at around 5-6% in recent polls, and a portion of that then should now transfer to Macron in the first round. Because what's happening is both him and Macron are going to team up together. Now, you could think from a PR point of view, this is a bit of a stroke of genius from a more centrist-leaning parties, because Macron is a former investment banker, young, dynamic kind of guy, 38 years old, whereas Francois Bayrou is basically 65 years old, has run for the last 3 presidential campaigns. He's kind of an old school dog, if you like, and if you can bring the two elements together, you would think you're trying to accommodate then the bigger voting electorate. So I think that's a very strong strategy, one that I'm sure Bayrou didn't really want to take on, but he's been unsuccessful on prior occasions, and for Macron, he'll take all that he can in order to cajole further votes. So certainly that's going to be interesting. And actually in the translation, Deutsche Bank saying this morning that it suggests around a 1.5% swing that will increase into Macron's favour overall, that now that they're together as a team. Bayrou has a strong influence on the centrist electorate, and so could still be a bigger boost to Macron further down the line. I think it's quite a good duo, if you like. It's kind of the Jedi and the apprentice from the centrist parties, if you like, in terms of experience. So certainly that could be interesting. On the note of France, before we move on to the FOMC minutes, let's have a quick look at Le Pen. So polls overnight, the far right leader has increased her lead in the first round of French election polling. She still is seen being beaten, though, by a wide margin in the runoff. So she would win 27.5% of the vote on the April 23rd first round. That's up 2.5 percentage points from when that poll was conducted at the beginning of the month. Macron seen coming in second in the first round with 21%, François Fillon at 19%. So obviously it's going to be interesting with polls going forward to see whether or not Macron can pull away from Fillon. If that does happen, does that then make the French possibility of Le Pen winning lessen? And so therefore, does that negate some of the euro weakness that's been apparent earlier in the week? And also things like French yields moving higher, the spread between things like French and US, let's say, or French and German bond yield spreads at multi-year, if not record levels in some readings. Does that start to retighten and pull back slightly if Macron starts to take a bit more of a lift here? So they're things that you need to be looking for. The May 7th runoff vote in this latest poll, Macron seen beating Le Pen 61 to 39. You can see that's almost moved back wider. And this is what I was talking about just then. If Fillon, though, was to go against Le Pen, it would be 55-45. This is what's key to trading the euro at this present point, is because Macron is far more favourable than Fillon to have a more clearer, distinct ability to beat and defeat Le Pen by a greater margin. So that's more net positive for the euro. Okay, going back to the chart. Obviously, euro dollar was two big areas of catalysts fundamentally that created a spark in activity, both of which were, first one being euro positive, the second one was really the euro benefiting from the weaker dollar on the back of the FOMC minutes. You can see here 7 o'clock. Let's have a quick look across the assets. Euro dollar popped higher. If you look at T-notes, if I just make that bigger, that was the 7 o'clock here. So yields popped lower. The dollar was weaker, yields lower, T-notes moved higher. Volatility in equities, they initially dipped but recovered pretty quickly. And then if we look at gold, let me just move that over. That was the gold reaction. What was quite interesting here is we were running a workshop last night for people who are relatively new to trading, and we had the screens up at the time. We were delivering some other content, but then we brought up this kind of shared screen I'm looking at with you guys now, and we saw the charts moving, and for me, without hearing the squawk, without even seeing the headlines, if you see the T-note move higher, gold spikes up, the dollar spikes lower, euro dollar spikes higher, for me, the charts are telling me what the Fed have just said. You can interpret it by the moves that are happening in the market. And this was kind of the point that I was saying to these guys, that ultimately the journey would be, hopefully, that over time they can get to the point where you can almost read the market like that, where often, again, someone like Will, it's about the movement makes sense, and sometimes you don't even really need to even know the news to some extent. It just makes sense. The Fed then, in that reaction, would have been dovish, or at least less hawkish in that reaction. The T-note spiking higher, the dollar weakening would all suggest to me that March is off the table, and although they've probably been fairly optimistic, it's probably not enough for the market to really be that decisive over how aggressive the Fed have been with their language, and ultimately we're not going to see a rate rise for a little bit to come, which really fits with expectation because of the lack of clarity over Trump. That's what the market move would say to me, and then ultimately that's kind of the gist of what happened, and hence why this morning, actually, despite the little brief flurry of activity around the release, nothing's really game changed, if you like, in terms of where the assets are currently sitting. So from a Fed headline point of view, Fed officials not losing patience fast enough to hike in March. Lack of big momentum in inflation keeps gradual policy intact. Majority of Fed officials want more clarity on Trump policies. The actual wording they use on that latter point was most participants continue to see heightened uncertainty regarding the size, composition, and timing of possible changes to fiscal and other government policies, and about their net effects on the economy and inflation over the medium term, and they thought some time would likely be required for the outlook to become clearer. So, not a great deal there, and certainly nothing to suggest that we're going to see a hike in March, in my view. The probability in fixed income futures, in federal funds, the possibility of a hike has decreased to 34%, which is a very minor change from about 36%. So not a great deal. It's still more fully priced for a June hike at this point. So that was kind of the Fed situation. As we were kind of anticipating, a little bit of volatility, but nothing sustainable, and I don't think it really changes the needle, so to speak, on the timing of the Fed. Other chart, though, to have a look at this morning is crude. You can see here really 2 points of interest, right there and right here. Now this is quite interesting, and this is something that that hasn't occurred in a while, because we had a very unusual thing from a statistical point of view. We actually had a drawdown in the headline crude figure, and that's because we've had let me just show you this chart here. These are the figures that have been coming out. You can see here 1, 2, 3, 4, 5, 6 consecutive weeks that we've had of builds in crude oil inventories. However, the blue line you can see there was a drawdown. It was a drawdown, in fact, of 884,000. Expectations were for a build of 3.3 million. We were, so used to phenomenally large size builds that market estimates have kind of bumped up more towards following that kind of trend. That did not materialize. So bullish on the headline figure. Cushing was a draw of 1.7 million. That's also fairly sizable for that particular figure. Cushing, you're never going to see like a plus or minus 10 million type number. 1.7 million draw is large. Gasoline was a drawdown of 893,000. Okay, it was expected draw of 1.5 million, but a drawdown nonetheless. And distillates was a drawdown of 4.229 million. Distillates, that's the biggest drawdown since October of 2014. Looking then at the size of the drawdowns in the likes of this distillate and also the Cushing figure, you can see the biggest we've had in some time here. In addition to that, going against the trend of builds, the drawdown in the headline figure. What that means then, shot higher on the back of the release last night shortly after 9:30, and this is what sometimes or quite often happens, is that if the API data overnight is enough out of line, then what can happen is that when Europe comes in the price gets another lift as they interpret, digest and trade that data, if you like. You've also had a bit of support around the pivot initial test before moving back up, really around that 54 handle, and then moving higher. This again in combination with a slightly weaker dollar in context from where we were yesterday as well, which is probably also lending a bit of a hand to that price movement. So that sets the scene for sure for the Department of Energy's oil inventories. And just remember, they come out at the later time of 4 o'clock. Whenever there's a US holiday, APIs are delayed a day, as too are the DOEs, and the DOEs come out at 4 London time, not 3:30, which is the regular time for those inventory numbers. Okay, quickly to round off some of the other headline news that we've had. You had this morning final German GDP, and you've had exports and consumers driving German GDP to the best year since 2011. Now, this hasn't had a meaningful impact on the market. Actually, it has had no impact because it's a final reading. But statistically, it's interesting because the UK, which I'm sure you've heard from the Brexiteers, have been banging the drum about how the UK is the best performing country in the entire kind of developed world in regards to Western Europe, outperforming. Well, that's no longer the case because only a few days ago, UK GDP got revised down, and actually Germany now is the best performing nation across Europe. So Europe's largest economy more than doubled in the last 3 months of the year, pushing Germany to its best year of annual expansion since 2011. Elsewhere, a couple of earnings reports to be aware of. Some of the headlines: Barclays profit misses estimates on bond trading and bonus charge. They did miss estimates. The firm recognised higher costs from deferred bonuses, and fixed income trading rebounded less than that of US rivals. Looking further into the report, fixed income revenues were up though, and something we've seen prevalent obviously with the US banks. We've had a high degree of volatility since really the US elections. So over the last quarter and the follow-on from there, from the Trump situation, you have had trading revenues take quite a significant shot in the arm, and fixed income revenues were up 33%. And so maybe a few underlying positives. Their shares are actually, despite the profit miss, trading in positive territory this morning. For the car makers, Peugeot, their profit jump bolsters Peugeot maker in GM talks. Full year automotive operating margin widens to 6% of revenue. So a couple of positive earning reports. Negative ones would be AXA, Swiss Re. They've come out this morning with slightly more disappointing numbers. So I would say mixed in terms of the corporate earnings scene out of Europe. That's coming as well to a bit of a close. We've obviously had Walmart kind of bookmark the end of US earnings season yesterday, I think it was. I think you've got RBS for the FTSE tomorrow, but then that pretty much wraps things up from an earnings perspective. And as you can see, earnings in terms of a macro driver of market direction has been fairly minimal. And that's because at the moment the market is not particularly focused on that particular area, if you like, on the micro level of earnings reports. What it is concerned about more is Trump and France European election jitters and so on. One thing the minutes definitely did throw up though as a question mark, or have made the event even more important, is the fact that the Fed are basically saying we still don't have the clarity needed to make concerted decisions in the near term about rate hikes without clarity on fiscal policy from the Trump administration. Trump, as we said yesterday, I think a congressional hearing is going to be held on February the 28th. That's going to be big because that's when we want more details. And then obviously his phenomenal tax plan should come in early part of March. Those for me are two of the biggest looming events for the market coming up from an overall multi-asset market moving potential. Can he deliver details, or has he just pumped the market up with great expectations and then fails to deliver and ends up kicking the can down the road to then only implement a watered down plan? How much of that, how much have we overpriced of what he's able to deliver? That's kind of the question. Okay, quick look at the calendar. We'll wrap things up. So looking at the session today, it is fairly quiet in the morning. Looking at the markets and the way that we've been moving, really since I've been talking, cable's been edging a little higher. Crude obviously on the front foot this morning, but equity's very quiet overall. Euro dollar, not too much movement. Fixed income, T-notes obviously very quiet at this point. Really likewise for the Bund as well. So maybe you want to think about more monitoring of this European situation. Any further updates for France, I think, could be market moving. But then ultimately, maybe when the US come in, the US afternoon might be more fruitful in terms of trading opportunity. The pickup in volume, you've got the weekly jobs data. The S&P Case-Shiller numbers are not market moving, so I would not be too concerned about those numbers or the house price index. But then later you get the service PMI, you've got the oil inventory numbers, and then really I'd be looking to the open on the floor for the volume pickup to really get a bit more direction possibly to these markets. So maybe a little bit of discipline to be enacted for this morning, unless there's a clear defined opportunity that arises. Speaker-wise, this afternoon you've really got one on the docket. Fed's Lockhart speaks on his tenure at the Fed ahead of his retirement on the 28th of February. So non-voter, but given the context of listening from the minutes which were dated yesterday, this might be a bit more of a informed, up-to-date insight from Fed thinking. Okay, going to leave it at that. Coming up to 9 o'clock. So have a good morning, and I'll see you in the chat room. Thank you.